Hey everyone, today we're going to talk about what kind of credit score do you need to purchase a home. So we're going to talk about what bad credit is, what good credit is, and what you can do to increase your credit score if you need to do so. So I have a couple notes up here that I am going to follow, and I'm going to shrink this down a little bit so I can see it. All right, so I was talking with someone the other day, and they were mentioning about how they saw a client of theirs who had bad credit, and I knew what their credit score was, and I was thinking, I don't know how you're classifying this bad credit, right? Because bad credit is a subjective term. It's hard to actually quantify what is bad credit, and so what I think happens a lot is people hear this term. They assume that since they don't have perfect credit, that they must have bad credit and they won't be able to purchase a house. When in reality, that is just not true. So, first, let's talk about kind of the whole spectrum of what a credit score is. So, a credit score is really just a model that is taking into account how you used debt in the past. And so there are different types of scoring methods. FICO is a common one that you might hear, or Vantage might be a common one that you've heard. And all they're doing is just taking into account things like how much debt do you have, how often do you use it, do you make on-time payments, and they're going to give a number rating how good you are at borrowing money. And it's kind of confusing and it can feel really mysterious. But that spectrum normally goes down from anywhere from a 3 to a 400 all the way up to an 800. And so they don't have hard stops. Each scoring model has different limits on what's high and low range. But there's a pretty wide variability in what your score can be and how it can land. So when we're considering the credit score when purchasing a house, the first place that you might look might be somewhere like Credit Karma, or you might have a credit card that allows you to see your credit score, which is awesome. So on there, they're using a type of scoring model that usually is going to give you a rough estimate of where you're at on that spectrum. Again, is it anywhere from this very low end range to a higher end range? It might give you some tips on how you can increase that. Now, there's always a little bit of shock, I think, when people go and put an application in with a mortgage lender to apply for a mortgage, and their score is a little bit lower than they thought or that they saw from somewhere like Credit Karma. And that's because there's different scoring models used. But don't fear, because I think a lot of people don't realize how low the credit limit actually is to purchase a home. All right, so let's talk about 4 different types of loans and the credit scores that you can have with them. Now, these numbers I'm about to say are not necessarily the only bottom lines, but they're what are most common to most lenders that you'll run into. So we're going to cover conventional, FHA, USDA, and VA loans. And if you're unsure with what those are, just let me know, and I'll probably make a video here in the future explaining the difference between these types of loans. But the conventional loan, its bottom limit is going to be a 620 credit score. Okay. Now here's where we get into this question of like what's good and what's bad credit, because I know some people in this industry who would see a 620 credit score and they would say it's terrible credit. Which I think is kind of funny, because it's not terrible. I would say it's pretty fair. It's an average range for that 620. I would say if we're going to if we're going back to, like, let's say high school, if you want to understand it that way, a 620 is going to be closer to a C, right? Where you could kind of bring that score up, but that's going to be the bottom line for a conventional loan. Now, FHA, that's another type of loan. It's insured by the government. FHA loans are fantastic. FHA is actually going to bring that from a 620 all the way down to a 580. So again, if we're going into the kind of high school grading method, I would put that at like a C minus. So it looks like this internet might be a little bit slow right now, but I'd put that kind of near a C minus, that 580 score on the FHA. USDA brings the score up a little bit higher. They want to see a 640 and above. And VA loans want to see a 620 and above. So you can see there's that spectrum of a 580 to a 640 is kind of where that lower bracket is. Um, so those are the bottom line limits of what some of these loan programs are. The difficult part when we run into just staying on the bottom of these different programs is that sometimes we can get higher interest rates, or we have to have more reserves in the bank account, right, to offset that lower credit score for that loan type. So really, if we're talking about what's good credit, what's bad credit, what's average credit, I think the best place to start is a 640. At a 640, you're going to start to see a lot better interest rates and programs with your loans at that 640 mark and above. And obviously, as you increase your credit score, you get better and better interest rates, right? Because getting a loan is all about risk. It's all about risk for somebody else lending the money to other people, and they want to know that their money is going to be able to be paid back. And the credit score helps them figure out what that looks like. And if the credit score is a little bit lower, they want to see other things like a good debt to income ratio or some assets to offset that lower credit score. So 640 really is going to be a fantastic place to begin with starting to look at applying. We absolutely can do loans anywhere from a 580 all the way up to the 800 range. And we do a lot of loans that are sub 640, but you serve yourself best and you benefit the most when you have that range that is 640 and above. So if you're looking at kind of building up credit and seeing what all of that looks like, here are a couple quick factors of what goes into your credit score. The first thing is on-time payments. If you have any late payments, any missed payments, those are going to be killer for your credit score. Those are going to tank your credit score pretty quickly. So you want to make sure that you're paying on time. And really the best way to do it is to set up an auto payment. You do not want to miss a credit card payment, a auto payment. You don't want to miss a student loan payment. You have to be making these payments on time to increase the credit score and to keep it where you want it to be. Okay. Another thing is utilization. So utilization is kind of just a big word for how much debt are you using, right? So let's say you had a credit card and the credit card limit is $1,000. Okay. If you go and you put $100 on that credit card, you have a 10% utilization of that credit card, right? You use 10% of the debt you have available to you. So what you'll want to do is look at how much total debt you have available to you. Count up all your credit card limits, count up all your loan limits, have that as one big number, and then look at all the debt that you have right now. Okay, and you want to keep that number below 30%. So if your limit in debt is $1,000, you want to keep your debt below $300 so that your score can stay at a decent range. Another factor that goes into credit is the age of accounts. So if you have new credit, it's going to be a lot more difficult to increase your score and to get a loan for a house if all those accounts were just started a couple months ago. Normally, lenders want to see about a year of credit history on those credit cards to be able to lend to, and that's going to increase your score as your accounts get older and older and older. So a 9-year-old credit card helps your credit score a lot more than a 1-year-old credit card. So one strategy, and obviously this depends on your personal situation, would be to open multiple credit accounts at the same time. A couple months ago, I went and I opened 4 credit cards all at the same time to be able to open up that credit limit. And then I just kept them in a drawer and just used them very seldomly to put on maybe for gas and then pay it off the next month. And then the last factor here, and then I will hop off, is inquiries. So inquiries is when you have what's called a pull on your credit. So it can be a soft pull, it can be a hard pull. Soft pulls won't affect your credit score. Hard pulls will affect your credit score very marginally, won't affect a lot. But basically an inquiry is where somebody who's willing to lend you money car dealership, a credit card company, a mortgage lender, and they're going to check your credit score. That's what a hard pull is. And so those inquiries go onto your credit report. And what you want to do is make sure that those inquiries are low. You don't want to have, within a short time frame that you applied for 3 credit cards and you applied for an auto loan and you also applied for a house and you applied for, some other loan over here. If you have all of those at the same time, those inquiries start to drop your credit score. So hopefully this gives you a good recap of kind of, what credit looks like, how it affects you a little bit. And really there's a lot of options available for you. If you have a credit score within that 580 range, up to that 640 range, I would start at the 640 range and then continue to start increasing your credit score. You're going to save a lot of money in the long run. But if you need to get into a house as quickly as possible, maybe your lease is up or something's changed with your housing situation, it's always an option too to say, maybe you have, let's say your credit score right now is a 580. Maybe you want to purchase the house now and then increase your credit score, and maybe 2 years from now, you refinance into a lower interest rate mortgage. And really the whole goal is to just set yourself up for success up front, create a good plan. That way, when you go through the process, you're saving the most amount of money possible, and it's as easy of a process as possible. So if you have questions about credit, more of what you can do to help build up credit or seeing if you're on the right track, feel free to reach out to me. You can send me a message or my contact info will be in the description. And feel free to leave a comment if you have any questions or ideas for some things that you want to learn about. All right. Well, have a great day, and I'll talk with you soon.